ready? You got me running, you got me running, got me running. Shake it, shake it, shake it, baby. Raise your hands up, raise them up.
All right, everybody. Happy Tuesday. It's just ticked over 11 a.m. GMT +8 time zone, and it is the 1st of March. So a big welcome to all who have hit the 1st of March with us as well. I think everyone in the call is in the same time zone pretty much. I think Steve a little bit later past 11 o'clock, but I hope everyone's having a great week so far. There's definitely been a lot of market turbulence as well. So I hope if you have been trading, that you've just been keeping things safe in regards to risk management as well, because it's definitely a bit of a tough market to read currently as well. So we do have a little bit going on today. It is Tuesday, so we've got the Euro USD and the Euro Pound in focus with Jin. I'll be going through the DXY and also just going through the equity markets and just going through a trade that I took this morning as well in the Australian stock market. And again, that's also been quite choppy as well. And we'll also have Kim Hong to start us off. He'll be going through the OPEC Plus meeting, which is happening tomorrow as well. But before we get into the nitty-gritty and the trade ideas for today, I'll just share the risk disclaimer as well, and I'll also read it out too. So it's just important to understand, and I will share the risk disclaimer. Sorry about that, guys. And I'll make that full screen. So any information shared in this video is not intended to be a trade recommendation. It is solely the opinion and views of the speakers. So please remember to do your own analysis prior to entering any trades. And again, for the members here that are catching the call live, feel free to ask questions, and then we can gather our thoughts and also explain in more detail later on within the LCMS Trading Club on EchoFin as well. So to get us kicked off today, we've got Kim Hong, currency strategist at LCMS Traders, going over the OPEC Plus meeting happening tomorrow. So over to you now, Kimmy.
Okay, thank you, Scott. All right, OPEC Plus meeting. As usual, okay, the timing of the meetings to be held tomorrow by the OPEC Plus is unannounced, okay, because they have a series of meetings and things like that, right? So it's not, I would say, properly scheduled, okay? It's not like the monetary policy meetings and things like that, or announcements, okay? So let's see. OPEC Plus, okay, recently, well, you know, there's so much going on, especially the Russian-Ukraine war and things like that, okay? So no doubt, okay, this whole geopolitical tension will definitely have an impact on the OPEC Plus decision, okay? So I think since last July, okay, they have the OPEC Plus, okay, has been keeping its oil production hike unchanged at 400,000, okay, per day, okay, 400,000 barrels per day on a monthly basis, okay, and well, because of rising oil prices and things like that, I'll show you guys the charts later on, okay, because of this whole rise in oil prices and things like that, many of the big nations like US, India, China, Japan, you know, they have been like prompting at the OPEC Plus to further increase their oil production hike. Okay, 400,000 doesn't seem enough. All right, they would like to see nations would like to see something higher than that, maybe like 600 or 800,000 barrels per day of hike on a monthly basis. Okay, this is to actually in a hope to actually bring down oil prices. Okay, but then obviously the OPEC Plus did not abide to this whole prompt. Okay, they did not want to increase their oil production hike further, okay, on a monthly basis, because they claim that you know, this rate is actually suitable for the current recovery and things like that. All right, so tomorrow, okay, during their meeting, will we be seeing any changes in the oil production hike? Okay, that's the main question to ask. All right, personally, I feel that we can actually expect no change. Okay, no change in the production hike for the month of April. Okay, meaning for the month of April, the OPEC Plus will continue to hike production oil production by 400,000 barrels per day. It will not be changed to, it will not be revised up to 600 or 800 or 700 and things like that, okay? Neither it will be revised downwards, okay? At this point of time, it's definitely pretty much impossible for them to revise their oil production height downwards, okay? So why is it that there's no change? Okay, actually there are two main reasons, all right? The first is of course, the ongoing war between Russia and Ukraine, okay? So as you guys know, okay, I might as well show you guys the chart, right? As you guys know, this whole war, ever since the whole invasion started, okay, of Ukraine by Russia, oil prices have been rising, okay, rising to what level? To the 100 level, okay. The top chart over here, US oil, which is the crude, WTI crude oil, okay, last, well, 24th was, when was 24th? Last week, okay? Last Thursday, it actually, crude oil, WTI crude actually rose to $100 per barrel, as you can see over here, okay? This long shadow before actually retreating back, okay? But at the moment, it's still trading very close to the 100 level, okay? At the moment, it's trading at $96.25 per barrel, okay? Pretty close to 100 already, okay? And then the bottom chart over here, which is UK oil, which stands for the Brent crude, okay, has, well, already like breached the 100 level to like the $105 per barrel, okay, before coming back down. At the moment, it's trading at $98.62 per barrel, okay, which is, I would say, is as good as $100 per barrel, okay? So, you know, this whole Russian-Ukraine war thingy going on, okay, has led to a lot of uncertainties, okay, like, you know, how will energy be transported from Russia to the European countries, okay? Moreover, the European countries, European countries has recently been, you know, carrying out tons of sanctions, okay, on Russia, okay? So there's a worry that, you know, they may not be able to get their oil, okay, from Russia, okay, through the whole pipeline that passes through Ukraine and things like that, okay? So this whole war actually created this whole uncertainty in how the European countries will receive oil from Russia, okay? And so because of that, you know, it actually caused a increase in oil prices, all right? So that is the main reason why we have been seeing oil prices rising like nobody's business, okay? And because of that, okay, you know, this whole war thing is pretty, I would say, you know, pretty volatile, pretty unpredictable, uncertainty, okay, pretty uncertain. On one hand, okay, or rather should I say, right now, okay, we may be seeing a war. The next moment, we may actually be seeing, you know, the withdrawal of troops and things like that. And the next moment, we may be seeing another escalation of tensions and things like that. Okay, so it's like an on and off thing, right? So with that, okay, the OPEC Plus will not want to be caught in a situation whereby, okay, so now that oil prices is rising, we're going to tone it down. Okay, so we'll increase from 400 to 800 and things like that. Okay, only to have it, you know, toned down at the later, during the next meeting, okay, for the month of May, or maybe even June or July in the near future, okay? So what the OPEC Plus wants is, you know, a consistent decision. Okay, right now, if we say 400, we'll keep it for 400, and then if finally we feel that, you know, more supply is needed, okay, in order to tone down the oil prices, then we will increase to maybe, for example, 500 or maybe 600, okay, and then try to keep it as consistent as possible, okay. So the OPEC Plus don't want to, you know, adjust the whole production hike from production quota, okay, on a monthly basis, because this will actually add more uncertainty to the whole market and things like that, okay. And moreover, keep in mind that based on the 400,000 barrels per day of production hike on a monthly basis, okay, I couldn't remember when, but I think the OPEC Plus will be seeing the whole, will be able to recover all the, what do you call it, the cut in oil production, okay, that was carried out last year. What was it last year? No, 2 years ago, actually, okay, 2 years ago when the pandemic actually hit, okay? So it's actually this year, 2022, that the OPEC Plus will be able to hike to the level whereby, you know, whereby they will be able to recoup the whole 1.9 million barrels per day of cut, which was carried out in response to the whole pandemic. Okay, so yes, the OPEC Plus will not want to unlikely, I would say, unlikely going to increase right now. Okay, I mean, given that they are left with like a few more months to go. Okay, so that's one thing. Okay, that's the first reason, Russian-Ukraine war. The second reason, okay, is the Iran and US nuclear talks. Okay, it has been going on for I don't know how long already. Okay, so long story short, okay, in a scenario whereby this whole Iran US nuclear talks were to go well, okay, were to proceed well, were to make good progress, okay, then you know, the US may actually lift the sanction that was imposed on Iran, okay, allowing them to, this will allow the Iran to actually produce more oil than ever, okay, and that will directly impact the OPEC Plus supply because Iran is one of the members as well, okay, and that will definitely cause, you know, the numbers, the figures to go quite pretty off, I would say, okay, maybe out of the OPEC Plus planning, okay, so because of that, you know, OPEC Plus were like, you know, why not we just, you know, keep our production quota unchanged for the time being, you know, and then wait for all these uncertainties to actually, well, be more certain, okay, be more predictable before we carry out maybe further changes to our production hike quota and things like that, okay. So two reasons why the OPEC Plus will be holding the oil production hike unchanged, okay, for April. All right. So at the moment, yeah, oil is still trading at, you know, close to 100, and for the Brent crude is, yeah, is as good as 100, I would say. Okay. So if you guys are trading oil or even trading the Canadian dollar, just keep in mind that, you know, for oil, for the time being, I don't expect oil price to actually come back down to below 90. Okay, for now it's trading comfortably above 90, the 90 level. Okay, I personally feel that it will stay on like that. Okay, until for the time being, at least for the time being. Okay, although I think this few hours ago, the Russia and Ukraine has just ended their first day, okay, of this talks, okay, at Belarus. All right, so the next talk will be either tomorrow or a couple of days down the road. Okay, so as the developments of the war actually unfolds and negotiation actually unfolds, we may see new headlines. Okay, so it's not only for oil or for the Canadian dollar, it will act across the board for the major currencies, especially the safe haven currencies like the Japanese yen and, you know, Swiss francs and the US dollar as well, or even gold. Okay, so we can continue to expect random headlines. Well, I wouldn't say random, but I would say unscheduled headlines coming out, and it may actually cause big movements in prices. Okay, oil price, gold price, and the currency as well. Okay, so as for the OPEC Plus meeting tomorrow, since we are not expecting any changes in the production hike quota, okay, coming in from OPEC Plus, it is unlikely that the oil prices will actually respond to actually react much to the meeting tomorrow. Okay, nonetheless, all right, pay attention to any headlines from you know, the meeting, although the timing is not stated, okay, but normally it's around past 1800 GMT plus 8 onwards that the meetings actually you know, that you will see start seeing headlines coming out from OPEC, like, you know, OPEC Plus planning to hold production unchanged and things like that. Okay, so tomorrow past 1800 GMT plus 8, just pay attention. If you guys are trading any Canadian dollar or Canadian dollar pairs, or even trading oil itself. Okay, other than that, yeah, the Ukraine-Russian headline will definitely have an impact on all this as well. Okay, so with that, any questions on this OPEC Plus? Although I don't think it's pretty straightforward. No change is expected. Little movement, little impact is expected on the oil price and Canadian dollar, you know, in regards to the OPEC Plus meeting. Okay, so in a scenario whereby, you know, if they actually were to carry out a surprise increase in oil production or things like that, I will keep you guys updated in the Ecofin chat platform. Okay, so with that, I'll hand it over to Scott for his analysis on the DXY. Over to you, Scotty.
All right, thanks very much, Gimme. And DXY, so we saw a pretty, I would say, docile session just for markets. Equities were up a little bit in the US, and we did see, one thing I did notice was that the Chicago PMI did come in at 56.3, expected was 62.1. So just indicating slower business activity is what that is showing. Although that figure is still quite high, but just sort of cooling off a little bit. And we just didn't see a significant amount of news to trigger a strong risk-off sentiment. And we did see the US dollar. It spiked to 97.40 or just below. And then if I bring the hour chart up, it did sort of come back down. So we saw a gap up and then try its best to make a run for recent highs of 97.72, but there just wasn't really enough there. It's obviously the Ukraine and Russia situation is creating a lot of market uncertainties, but there are a lot of developments that are coming out. The EU seems to be really doing everything that it can to try and help Ukraine. And the situation for Russia is that they haven't taken the capital. These seems to be the key points to what markets are sort of looking at. And it seems to be somewhat of a stalemate, but very dynamic, especially during the evening time for Ukraine. So GMT +8, we're about 8 hours behind Ukraine. So that just means a lot can sort of happen as we're, getting into the trading session for the Asian market. So definitely something to be mindful of. If you are someone that trades during the day in this time zone, that things can quickly escalate, or they could even come sort of cooling back down if the negotiations seem to sort of be a little more fruitful. But currently, how I'm reading into it, it's just lacking a bit of clarity. And really with markets today, and I'll bring up the news to start with just for what to look for later today. And we do have a little bit happening. We did have the preview of the interest rate decision from Gimme yesterday. That's coming out in less than 10 minutes for the Aussie dollar. And we do have the ISM manufacturing PMI for the US. That's 11 p.m. GMT +8 tonight. And we did have, I just want to show, we didn't really have a lot outside of the Chicago PMI. Goods trade balance was down a little bit, but really it was just sort of happy the US dollar to not really react at all to the upside or the downside really later on in the session as equities did get brought up a little bit, but there's nothing really that's saying there's a lot of confidence in the market. And I just want to quickly go down to Wednesday as well. We do have at 11 p.m. Now this is on Wednesday. So tomorrow night, 11 p.m., we've got the Fed Chair Jerome Powell testifying. So that could be interesting to see if the language is changed at all. And that is after the ADP non-farm employment change as well, expected to be 378, which the previous figure was negative 301K. So just something to look out for there. And I'll just go back to the charts now, and we'll just sort of have a look at what happened. So just to start with, in the US, we've got the S&P 500 just on the daily to give you guys an idea of what is going on. So that's what we did see. Now, as you can see, quite a lengthy wick. We closed near the high of Friday, and now we've currently got markets coming back down now in aftermarket trade. This is the future contracts, and we've got the NASDAQ not looking too bad for risk sentiment as well. And it's just at a point where we have seen some resistance. So cautious tones need to be kept because a lot can happen still. And just quickly, from the Aussie markets perspective, we saw iron ore did increase a little bit. I made a play here on this candle that's currently forming on the daily. And if we go down to the hourly candle, it's just a quick trade. 18 is showing some support, 18 flat. we got a push. I didn't see enough, so I didn't even get to move the stop to break even. So it was just a 1 hour loss of 10 ticks. So closed that back below 18. So I closed at 18. So we'll see what happens here. But markets are really flat in the lead up to the RBA rate decision as well. So it's going to be interesting to see what's mentioned in the statement. No rate increases expected either. So from a standpoint of a US dollar, I would just say we've got some news to look for. And I think really I'll remain flat and just see what Jerome Powell says tomorrow night before thinking about taking a trade, which would be more than likely long over 97, but that could change. So keep it flexible. Now we've got the Euro, USD and the Euro Pound in focus with Jin now. So I'll hand it over to you now, Jin.
Thanks for that, Scotty. So I'm going to do it a little bit differently. I think I'll speak on the Euro dollar and the Euro pound for a couple of minutes, and then hopefully we can coincide with the release of the RBA rates decision, possibly no rate change, and also have a quick look through on the rate statement, right? So with that, just quickly, that's happening at 11:30, the cash rate and the rate statement from the RBA. With that, we have the CAD GDP tonight. So Traders Club members, remember we do have a session tonight, so make sure you jump onto that. We'll prep you for that. The GDP number looking to go from a 0.6 to a 0 flat month on month. US ISM manufacturing PMI looking to increase slightly from a 57.6 to a 58. And then also just a quick reminder for the rest of the week, we do have some news on the Eurozone. Not going to change prices too much at this point because of the conflict happening in the Russia-Ukraine borders. And then we do have the CAD rates decision, looking at a rate increase there. So play that together with the oil prices that Kim Hong was just sharing with you just then. And also later into the week, we do have Chad Powell testifying, and also on Friday, the non-farm payrolls. In this case, not going to be looking too exciting because of what's hanging over the globe at this point. So with that, looking at the euro dollar, the last time we spoke about the euro dollar, looking for it to break below that 1.13 level for that selling opportunity towards the 1.12. It did that exactly. At this point now, sitting at this 1.12, the likelihood or the tendency is to look for it to break below this point, break below this 1.12 towards that 1.1 support level. However, this seems to be a very strong support level. If I do zoom out, you can see that last time it came towards 1.11, bounced back up, and then we haven't seen it for a very long time, all the way to breaking below that point back in June 2020. So at this point, as I said, the tendency is to look for it to sell down, but be very careful to sell when selling down the euro dollar. Very strong support level at this point. A 40 pip stop loss could give you an 80 pip take profit, a 1:2 risk reward ratio towards the downside. But what I anticipate here is that we're going to see this support level hold quite strongly, a bit of a fake outbreak below before bouncing back up again. So I'll be a bit more cautious. I would say look to sell below that 1.1170 level. Stop loss still 40 pips, take profit still 80 pips towards that 1.10 support level. Quite easy on the euro dollar H4 time frame there, but this support level might take some doing before it can break. We might see that bounce up as what we saw earlier into the week before it turns back down, but look for that break. I wouldn't be too comfortable buying it up for the medium or longer term. I'll look to buy, maybe to scalp it up, but the tendency will still be to sell it down. With that said about the euro dollar, the euro pound, the last time we said this 82, 83 level is a very strong support. We have been looking for it to bounce up once, bounce up twice. It's done that, it hit that 84 level and it's tracking back down again. At this point now, I think that we might see it track back up. It seems to have found that support at this 83.50 level, and interim support at this 83.50. I'll put a line in there. right? So at this point, it seems to have found that support there. I think that we might see it track back up a bit, maybe test at 84 level again before turning back down. But how the euro pound moves as we anticipate for the euro dollar finding this level may be a little bit hard to break. Have to look into the pound dollar as well, look into the pound dollar to know what could push the euro pound in either direction. I think that the selling opportunity is still there. If you're looking to sell it down, you could be looking for 83.41, a very small trade, about 20 pips stop loss, about a 20 pip, 30 pip take profit level, a 1:1.5 risk reward ratio towards the downside. But I think that more prudently, you should be looking for it to bounce back up, to trade off that 84 level, to trade it back down. Looks like a better trade at that point. All right. So kept to the time, 11:29 at this point, waiting for the rate statement released in a minute. Okay, so at this point, rates looking to keeping to refresh this, rates looking to hold at a 0.1%. Where's the rate statement? Okay, so let's look through the rate statement. So they maintain cash rates at a 10 basis point, 0.1, continuing to recover. Resilience is evident in the labor market. 14-year low at 4.2%. Wage growth has increased. Inflation has picked up more quickly than RBA had expected, but remains low in other countries, lower than other countries, to about 3.25% before declining to 2.3%. So it's still within their range of the 2 to 3% inflation. It's looking committed to maintain high supportive monetary policies conditions. So at this point, with wage growth in modest, sometime before labor cost is at a consistent with inflation being sustainably at the target, it seems like they're not looking, they haven't hinted at anything about increasing rates into the future or into the near future, right? Even with the dollar, with the Australian dollar at its low of past years, interest rates at historic lows, no hints about further rate increases, no hints about what could, whether they're going to do something into the year, later into the year. So I think it's still quite unknown or quite flexible at this point. So what we have actually seen on the Aussie dollar is not much reaction, even looking at it on the H1 time frame. We've seen a small move. It's tracking lower, but not a big move as we expected, because we haven't seen any big actions from the RBA, no surprises there as well. So in this case, a bit of a non-event on the RBA rates decision. And anything else to add there, Gimme? Have you spotted anything else?
No, it's pretty much like a copy and paste from the last statement.
So don't rush to jump into any trades at this point. Probably a non-event on the RBA. And then following on from that, I think the focus will shift back towards the euro, as we just spoke about, and also into the pound and the euro pound. We'll tell you more about the pound tomorrow. With that, I'll pass it back to you, Scotty.
All right, thanks for that, Jen. And remember, guys, we do share the upload of this video into the LCMS Trading Club. So make sure to catch it as well if you missed anything from today's episode. Thanks for watching as well, and hope to see everyone tomorrow for the pound analysis. Bye for now, everyone.